This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, across Bloomberg platforms, radio, TV, YouTube, Bloomberg Originals. Yes, indeed, this is Bloomberg Businessweek Daily on this Monday, April 13th, 2026. Tim is off today. He did some double duty over the weekend. In fact, we're going to highlight some sound from that a little bit later on. But with me is none other than Bloomberg News equities reporter Bailey Lipschultz. And you've been watching the markets. Does this make sense, considering?
It's kind of odd. Trump speaks and the market rallies higher. Volumes are still not really that strong, but it certainly still seems like we're in a era where anything that the White House says is kind of what's going to drive the market. So excitement about potentially reaching a deal despite the blockade, kind of odd.
I'm trying to, but maybe negotiating tactics. So maybe some think it's getting closer. We should point out WTI crude, we were up as much as more than 9% earlier in the session. Now, Bailey, just about a 2.7% gain. So we're up, but we're off those highs and those session highs, I should say.
Yeah, and back slightly below $100 a barrel, which has been a big touch point for investors as well as the White House.
Yeah, right. So this is important. This is something we focus, especially, I think on my morning read-in, somebody was talking about 150. If we get to that 150.
That was the breaking point. That was kind of the doomsday scenario a few weeks back when we were watching it march higher. But even this morning when we were on our production call was kind of, all right, we're higher, but we're not where we were 2 weeks ago.
Exactly. We have heard President Trump, he is out and about. He's making lots of comments today. And he did speak from the White House, from just outside in the portico at about 12:40 p.m. Wall Street time. Here's what he had to say about the back and forth in this war.
We can't let a country blackmail or extort the world, because that's what they're doing. They're really blackmailing the world. We're not going to let that happen.
Has the blockade started, sir?
Yeah, started 10 o'clock.
Yep, that's right. President Trump outside the Oval Office there at the White House. And he did say that blockade, the U.S. blockade in the Strait of Hormuz starting at 10 o'clock. So the blockade, Bailey, definitely one of our big themes. And I think what's interesting is you kind of had Iran with their blockade or threatening, and now we've got the U.S. It's kind of like a blockade off.
Yeah, block your blockade, because it's all a show of power, it seems. And it's just interesting. You know, is the U.S. going to be able to succeed in those efforts?
Right.
Or is it a battle that's really uphill?
Well, great thing that you brought up, because our Marc champion, he's a Bloomberg opinion columnist. He writes about this, and he says why the U.S. can't win in this blockade that it's imposing. We're also going to get into the significance, too, of Viktor Orban's election loss in Hungary. I think this is something that's kind of in the background, but I think we should pay attention to. We're going to be heading to the White House, too.
Heading to the White House nonstop. It feels like
we're seeing a lot of it.
Exactly.
Yeah, never-ending commentary on the war. But also, you rightfully so in our planning call talked about, let's not forget, we're now actually getting some concrete information from the business environment, and particularly the big banks. Goldman Sachs actually reporting today.
Yeah, under a little bit of pressure. It's going to be interesting to kind of break that down. But the big thing that when I was looking through some analyst notes were kind of high expectations. We have seen banks benefit. So as we mentioned, though, discussions around what they're actually seeing and providing a bit of real detail outside of the headline-driven environment.
Yeah, all kind of is part of our backdrop today. Also, Mike Contopoulos, Janus Henderson Investors, head of multi-asset macro investing, connecting all of this together into the trade. So we got a lot coming in just the next 60 minutes. First up, though, let's get a check on that trade for you and those top business stories. Here is Charlie Pellet. He's back.
I'm back indeed. Here's what's going on. The Dow, the S&P, NASDAQ, all advancing. Bailey mentioned what's going on with Goldman Sachs. Stock declining, down 2.3%. Tomorrow, of course, JP Morgan Chase, Citigroup, Bank of America, Wells Fargo. We got you covered on all those earnings. S&P right now up 31, 68.48 where we stand. Just about the best level of the day on the S&P, up now by about 0.5%. The Dow up 39, has been swinging between gains and losses. Right now, we're looking at an advance of about 0.1%. The NASDAQ Composite Index up 156 for NASDAQ, higher now by 0.7%. The VIX below 20. We've got the 10-year yielding 4.30%. Gold down 0.4, 47.31 the ounce on the precious metal. Crude, the big story, now with a $98 handle, 98.78, still higher by 2.3%, but trading below $100 a barrel. Brent also below 100, Barrel of Brent 98.90, up by 3.9%. Oil prices pairing earlier gains. ExxonMobil has now started to decline. It is down by 0.3%. Chevron holding on to an earlier gain of 1.2%. ConocoPhillips up by 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, everybody. Charlie really breaking down the top news and about that U.S. blockade covering traffic to and from Iranian points that has gone into effect. President Trump did say that the U.S. would attack any Iranian vessels that approach U.S. ships in the Strait of Hormuz as that new naval blockade of the vital waterway took effect today. Here's what the president posted on social. And there's a lot here, but I'm going to get to what I think is the big warning. And that is, he talks about Iran's Navy laying at the bottom of the sea, completely obliterated 158 ships. What we have not hit are their small number of what they call fast attack ships, because we did not consider them much of a threat. Warning, if any of these ships come anywhere close to our blockade, they will be immediately eliminated using the same system of kill that we used against the drug dealers on boats at sea. So, yeah, here's that warning from the president. Meantime, we also heard from John Bolton over the weekend, Bailey.
Yeah, really interesting conversation with your normal co-host.
Normal. Nothing's normal right now. He did. He talked about President Trump's blockade making sense. He did join the weekend team of Tim Stenovec and Christina Ruffini. He talked about the U.S. war in Iran.
The only way to get true peace and security in the Middle East is to have regime change in Iran. You can negotiate all you want with these people. It's not going to change anything. And I think the failure of the Islamabad negotiations just makes the point as clearly as one can. I think the ceasefire was a mistake. Part of the problem here was caused by Donald Trump a few weeks ago lifting American sanctions on the shipment of Iranian oil. And I think he was motivated by fear of rising international oil prices, and he thought a few tankers might get the price down. I don't think that's correct, and he should reimpose the sanctions.
That was former National Security Advisor John Bolton with Bloomberg's Tim Stenovec and Christina Ruffini on Bloomberg this weekend. Carol, obviously a lot going on. An interesting column out today about how the Hormuz blockade is a, quote, throwdown the U.S. can't win. That's written by none other than Marc Champion. He is Bloomberg opinion columnist covering Europe, Russia, and the Middle East, joining us from London. Marc, President Trump saying the U.S. will eliminate Iranian fast attack ships if they come close to our blockade in the Strait of Hormuz. Why do you believe this is a game of chicken between the U.S. and Iran when it comes to the blockades of the Strait of Hormuz? And how is that one that the U.S. can't win?
Well, in essence, what you have is the U.S. saying, okay, we're going to block in order to get you back to the table, and we're going to block in order to kind of force you to reopen the strait. And you get into a question there where the Iranians have said clearly, we are not going to respond to that, except that we will start hitting, Gulf ally ports. The ports of the Gulf allies, and in response, if we need to. And the question then becomes, okay, so the U.S. has cut off, the Iranians are stopping the supply from the Gulf states. The Americans are stopping the supply of oil from Iran. What happens? Well, it not so much today, because the markets are listening to Trump saying that, the Iranians have already come to us and are asking for a deal. We'll see if that's true. I have my suspicions that it's not. But what happens then is that at some point the price of oil will go up because supply is shrinking. And then it's a question of who can last longer. The Iranians will be suffering, but they've had a windfall for the last month or so through their ability to sell oil, and sanctions, as John Bolton said, were lifted. They were eased so that they were able to sell. They didn't have to sell at a discount anymore. So they've been earning a big windfall, and they have a cushion now, so they can sit on that cushion for several weeks, or more, and even then, after that cushion expires, it's a question of are they willing to endure more economic pain, to inflict more economic pain on their own people than is, the U.S. and other countries around the world that will be suffering inflation and potential recessions as a result of U.S. actions in the Gulf. And I just can't really see, knowing that who the Islamic Republic are and how their leaders kind of have almost been looking for this kind of showdown with the U.S. for decades, that they will fold.
And you write in your column, Marc, make no mistake, the Iranian regime is monstrous and should not be allowed to have a nuclear weapon. And you're not alone in folks that have come in and say, this has not been a friend at all of the United States in particular for many decades here. Having said that, we keep saying that for Iran, this is existential, and their willingness to fight kind of to the bitter end. Regime change is not easy. We keep hearing that over and over. And that is kind of different from where the U.S. is coming from. I mean, they could back off. The president reminds us we don't need the Strait of Hormuz. So I'm just, wondering, is that part of, too, why the U.S. can't really win using this tactic?
I think it's tough. I mean, I don't. There's a lot that I don't agree with John Bolton on. But one thing that he said, which is correct, is that this war only made sense to begin if it was going to end with regime change. Otherwise, you're simply trying to massage through force, the behavior of the Islamic Republic, and that's an incredibly difficult thing to do. It's hard enough through negotiation, but to do it by force, to kind of calibrate that and to get the right kind of reactions, it's almost impossible to do. So what you really want, to happen is regime change, so that you just have a different bunch of people in charge of whatever nuclear, stuff that they have, in charge of their ballistic missiles. This is a nation of 92 million. They are not going to completely disarm. What you want is to have a regime there that has an army, and it has an armed force, it has whatever, an air force, whatever it has, and it simply isn't going to threaten its neighbors in the way that Iran has. Regime change so far has failed.
Hey, one last question before we go, and this is on something else that I know you've written. You understand Europe so well. The Viktor Orban election outcome. We're hearing his daughter and son-in-law have left. Allies have disappeared from airwaves and social media pages. There's unconfirmed reports of the movement of assets abroad amid calls for the Orban-connected elite to be brought to justice. Just got about 30, 40 seconds here. What's the significance of this loss to the region, to Russian President Vladimir Putin, to even to President Trump?
It's really big. I mean, essentially, here was the model conservative, from sort of MAGA-type conservative in Europe. He was in power for 16 years this time, 4 years on a previous term. And, he completely changed the fabric of Hungary, primarily because of a kind of quirk in the sort of institutional, makeup that allowed him to change the constitution at will and to change laws at will. That is now reversed. It's not just that he lost. The opposition won with a constitutional majority, so they are now able to undo a lot of that stuff. And I think that's why you see, a lot of his allies, fleeing, because they know that the boot's now on the other foot.
All right, great stuff as always, and we always appreciate you staying up late there in London. Marc Champion, Bloomberg opinion columnist covering Europe, Russia, and the Middle East. Highly recommend you check out his columns on the Bloomberg and at Bloomberg.com. So we are watching the war, but we're finally starting the earnings season.
Earnings season underway in full effect, and really interestingly, kicking us off is Goldman Sachs. Normally we get JP Morgan.
It kind of messed me up this morning. I kind of forgot about this.
The same thing happened on our team call. And breaking down Goldman's earnings, the stock down right now a little more than 2%, is Bloomberg News banking reporter Todd Gillespie here in the studio. Todd, walk us through the good, the bad. Why is the stock down more than 2%?
Yeah, Bailey. I mean, today was actually quite a funny day. I mean, Goldman Sachs reporting earnings, the first among big banks, which is, as you say, is very, very rare. And obviously at a moment where, Iran is top of the agenda, private credit is top of the agenda, AI is top of the agenda, there's just a lot of chaos to happen, regardless of who's reporting first. And for Goldman to go first and alone on the first day, David Solomon hasn't had the best day today. He's even lashed out at the research community, by the way. On the analyst call today, he said, one of the biggest misses in the headlines that came out today is that the bond trading desks and the rates traders, the FIC department, basically, the FIC division of Goldman Sachs, missed expectations of analysts by $800 million. So instead of posting about 4.8 billion for the quarter, they actually posted about 4 billion for the quarter.
Big difference.
There's a big difference, and it's a drop on last year. It's a surprise drop. Not just missing analyst estimates, but actually lower than the same quarter in the previous year. And one of the things that he says is that actually, this was our 10th best FIC quarter ever. A lot of this has to do with expectations that are set in the research community. David Solomon said.
Is he right?
Well, I mean, perhaps, but I mean, you can't always blame these analysts for not knowing exactly how the trading volatility is going to plan out and what Donald Trump is going to say tomorrow and what that's going to happen to Citadel and Millennium and what they phone up their banks to want to do.
I thought management teams, though, were supposed to talk to the analyst community and it's kind of like behind closed doors, be like, hey, maybe you take this number down a little.
They do. But I guess to be fair to everyone in this case, right, this is a quarter where we've seen intense volatility in different directions. You've seen blow-ups, big trading blow-ups, which potentially you think that's good for banks, then you think it's bad for banks the next day because some hedge fund pod has blown up and you don't really know. You don't have great visibility into that when you are dealing with so many trading firms that are private, and most of the intel that you're getting is through Bloomberg reporting most of the time.
How much is it, though, expectations? I mean, this is a stock that was up 53% last year. I mean, almost 50% the year before, right? Yeah. We've seen these big banks do really, really well. So how much is it just maybe, expectations
sell the
valuation?
Good news, right? Yeah, exactly. And I mean, you're right, Carol, to some degree, all the banks did really well last year. Someone's looking for a bit of froth to pop, to start settling again. So maybe today is the day that happened to Goldman Sachs, but we'll see the rest of the week whether that's going to happen to the other banks as well. But look, you've got JP Morgan reporting tomorrow, Citi reporting tomorrow, Morgan Stanley Wednesday. We'll see.
Well, are these banks going to be kind of addressing the elephant in the room, that is private credit?
Yeah, Bailey. I mean, I think the elephant in the room for half of Bloomberg might be private credit. I think if you phone the executive teams of Goldman Sachs or Citigroup, I think a lot of them will start moaning to you and trying to hang the phone up at you.
But they have exposure.
They do have exposure. They do have exposure. And I mean, Goldman Sachs, its own private credit fund. I mean, Goldman Sachs has its own asset management arm, which is very big, unlike most of the other big banks. And that unit itself, one of its funds, narrowly escaped a redemption cap of 5%, which would have meant all sorts of other things that Blue Owl and other firms were exposed to as well. So they're just kind of eking out here. But crucially, yes, you're right. The back leverage that a lot of these private credit firms have, a lot of these private credit firms borrow from big banks and then lend on to, potentially less reliable borrowers in the wider market. And that's where some of the blowups have been. So being able to understand and fully understand tracing that, the exposure that some of these banks have is one of the things that some of the analysts were concerned about today. The banks generally have been trying to put a lid on that kind of worry. And so far, there's that. I think on the retail side of that, David Solomon did admit today that concern is likely to continue on the retail side of things, particularly as headlines continue and potentially, as we've seen pockets of fraud in the market, in the private credit market, and, a surge in redemptions particularly on the retail side. On the institutional side, it seems to be more mellow so far.
Just really got about 25 seconds left. Goldman, tell us anything about what we're going to get tomorrow from JP Morgan and the others?
Oh, and I actually missed the great headline for Goldman, which, by the way, we had to
the $5 million bond sale?
No. The equities record. So the equities trading record. Okay. The equities traders at Goldman Sachs posted their best 3 months ever of any bank in Wall Street history, which surpassed their last record, which was last quarter, by more than $1 billion. So it was pretty huge. So we'll see. Stock trading, I think, will be the theme of the week, but maybe FIC of more disappointing.
High bar for everybody else. Yeah. You covered it all. Thank you. Bloomberg News banking reporter Todd Gillespie here in studio. Coming up, we're going to kind of get a multi-asset view on the markets. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are pushing higher. S&P 500 index just about the best level of the day. Dow Jones Industrial Average 48,000 even, up 84 right now, up by about 0.2%. S&P up 0.5. NASDAQ up 155 for NASDAQ, a gain right now of 0.7%. The VIX below 20, a 10-year at 4.29%, with a 2-year 3.77%. 0.5%. Gold is down $21 the ounce to $47.28 for gold. A drop now of 0.4%. Crude, the big story today. Yes, up 2%, but below $99 a barrel now. 98.52, talking about West Texas Intermediate crude. Barrel of Brent, the global benchmark, 99.16, now up by about 0.4%, up by 4.2% on Brent crude. So again, the Dow, the S&P, NASDAQ all higher. We're keeping an eye on shares of both Dell and HP Inc. They jumped after a report from the website Semi-Accurate that NVIDIA is seeking an acquisition that would, quote, reshape the PC landscape. Dell shares, they're up 5%. HP Inc. up now by 3.2%. NVIDIA is down 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Carol Massar along with Bailey Lipschultz. Tim is off today. Now, last block, we caught up on geopolitics. We talked with our own Marc Champion about the blockade, the U.S. blockade in the Strait of Hormuz. We also got today's earnings from Goldman Sachs, which kicks off really a big week for the big banks when it comes to their quarterly updates. On that, though, Goldman Sachs CEO David Solomon weighing in on markets on this morning's earnings call with analysts and investors.
2026 began with a degree of optimism. Markets hit record highs and confidence continued to build, with most clients focused on growth, strategic activity, and capital deployment. As we've said, things rarely move in a straight line. And as the quarter progressed, the macro environment started to weigh on sentiment. Volatility increased meaningfully amid concerns around AI-driven disruption in sectors like software, heightened uncertainty in parts of private credit, and the conflict in the Middle East.
Yeah, heightened uncertainty for sure. That's Goldman Sachs CEO David Solomon on this morning's earnings call with analysts and investors. Let's stay on markets. Here in studio, Mike Contopoulos. He's head of multi-asset macro investing at Janus Henderson Investors. The firm has about $20 billion in assets under management, and he does join us, as we said, in our New York studio. Welcome. How are you?
Great, thanks. How are you?
Doing okay. Watching it feels like some calm in the market today. We've seen oil prices, they're up, but they've backed off. We've got stocks a little bit higher, but Bailey, you mentioned light volume earlier today. I don't know, what draws your attention on a day like today?
You know, I don't think it's any one thing. I think what we're seeing is a market that's a little bit confused, very directionalist. Can't really figure out which way it wants to go. And that makes a lot of sense. I mean, there's a tremendous amount of uncertainty out there. And so I think investors are uncertain, sitting on their hands a little bit, waiting to find what the next political move is going to be, what's going to happen with oil prices, more importantly, inflation and earnings, right? We're just at the start of earnings season here. And, what ultimately will all of this, uncertainty mean for Fed action and rates? So I think there's a lot to consider if you're an investor.
It's a long list, right?
It's a long list. I think, David Solomon kind of, was maybe... It was a light touch on how much uncertainty is out there and how much has changed over the last month.
That's a great point. And I think that we're going to feel what CEOs say. But do you feel like investors in general have been downplaying the level of uncertainty that we could have for a longer time?
Yeah, it seems as though certainly within U.S. markets, that's definitely the case. I think there's meaningful implications that the war has had on oil prices, on potentially margins as we go further into the year. On the flip side, if this whole thing resolves, markets could be meaningfully higher. I mean, we went into the conflict in a very good spot, as David mentioned. And so, I think investors are not probably pricing in enough volatility yet. You look at things like the MOVE index or the VIX index, and you could easily make an argument that they should be higher.
Well, the thing that I find interesting is if you look since the end of February when the first attack happened, we're down about 0.5% on the S&P 500. The Russell 2000's up 1%. Just thinking about kind of the divide that we've seen in this stock market, just driven by the political uncertainty, what areas do you see better positioned as we head into earnings season? And are you looking for certain areas to really shine as we get management teams talking?
So, here's what I think you're supposed to be doing. I think, number one, there hasn't been that much of a change yet on the macro outlook. I know that sounds crazy given all this uncertainty that we just spoke about, but earnings growth was really, really strong in Q4. We came into Q1 with a really, really strong macro backdrop. We were one of the few out there saying that inflation was probably going to be higher than the market expected because of that strength. And that would lead to tighter...
Just from growth and activity.
Just from growth and activity. I mean, things were pretty good. And it's interesting, most of our signals suggest that those haven't rolled over yet. You haven't seen estimate revision ratios plummet. You haven't seen forward-looking indicators like industrial production and PMIs plummet. I mean, are you starting to see some stress? You haven't seen employment, of course, has not plummeted, right? And you're right around the break-even rate for unemployment at the moment. And so, we haven't really seen things roll over yet. So I'm not entirely convinced that you're supposed to change the positioning that you had coming into the year. Whatever your predisposition of that was. In our case, it was broadening.
Yeah.
It was international markets. Mm-hmm. And I think you want to continue to maintain that stance because the whole thing could blow over imminently. But you certainly have to account for more volatility. And so what we've done is we've raised cash to account for that.
How much have you raised it by?
So we have about 7% in our portfolios.
What's normal for you guys?
2.
Oh. Okay,
yeah.
So kind of a bearish stance. Do you how do you qualify that?
Yeah, I wouldn't necessarily say it's bearish.
Yeah.
Because we didn't change our tilts within our allocations. So we're still tilted, modestly cyclical in international markets. We own emerging markets ex-China. We own Japan, Europe. We own industrials in the U.S., energy and materials. Those aren't necessarily bearish positions.
Yeah.
Right? If I was really bearish, we would certainly have more cash, but we'd be in staples. We'd be in healthcare. We'd be in utilities. Actually, those sectors are not our overweights in our portfolio. So what we've done is we've retained the contours of our portfolio pre-war, but we've increased cash to account for uncertainty and to make sure we're just not over-allocated to equities. If everything blows away, we think the landscape from January and February is going to reemerge and we'll do very, very well. And if you end up falling, the cash is going to act as a buffer.
But to increase cash, you got to take something out of. Where did you take out of?
So we brought it down out of both the U.S. and international markets. So you can think we almost prorated our holdings down by about 500 basis points. Explicitly, we did it through large cap value and developed markets. But it was a general prorating of the portfolio's contours.
No, that's interesting because I think one of the big questions going forward is this was supposed to be a quick conflict. It was supposed to be over in 2 weeks. Here we are already middle of April. At what point do you start reassessing allocations? At what point does this drag on too long for you to be comfortable with some of the ex-US positioning? Because obviously the knock-on effect for regions like Asia, as the Strait of Hormuz is closed, likely would be greater.
We're certainly getting closer to that. I think we're going to learn a lot over the next 6 to 8 weeks at the longest. It could be sooner than that, 4 to 6 weeks even, as we start seeing more and more data come in, macroeconomic data, earnings data,
so we go into
data,
June.
et cetera. Yeah, I think that's probably right. I mean, you're going to have a very good handle on the impact of what's going on in Iran. How the higher oil prices are going to affect sort of the downstream earnings landscape. Probably by, mid-May or so.
Well, one thing that we've obviously been tracking is the expectation around the Fed. And if you go back pre-war, we were penciling in, 2 to 3 cuts for the year. Now, maybe one in the middle of next year. How quickly can you reposition for Fed expectations, just given to your point, we're not really going to see the knock-on effects in economic data, at least for a little bit longer?
Well, this is where I think there is some degree of certainty out there. We felt like the inflationary impulse from strong economic growth, demographic changes, deglobalization, a whole host of things was not going to allow the Fed to really cut significantly this year. And so when the market was saying 2 or 3, we were saying 0 or 1. As the markets kind of come down to no, we say there's a probability of a hike. And so ultimately, I think investors need to consider that we're just not in an environment where the Fed is in any sort of position to cut interest rates. And so we've been fortunate in that we've sort of been a little bit, we came into the year neutral duration. As rates fell and went into the 3s, we brought down duration pretty meaningfully. And we remain underweight duration and feel very, very comfortable with that. We don't think there's going to be much positioning changes on the fixed income side within our portfolios, unless you get a big credit spread widening event, in which case we'll go overweight credit. And right now we basically own none.
Hey, Mike, in the notes that you guys shared with us, the belief is on the Fed staying there, doesn't need to cut. If they do, it will be a mistake, and we would expect Treasury yields to go much higher. That will further hurt growth momentum in long duration assets while helping value in floating rate debt. You believe that's your position? Yeah,
I think there's I think that's what will happen if the Fed cuts interest rates. I think if Warsh comes and comes in very aggressive to a cutting campaign and can convince his colleagues to do so, I absolutely, that's our position, 100%. I think that's ultimately funny enough, that would probably be the way you ultimately slow growth and get a recession. You cut interest rates, the market punishes you, the bond vigilantes come out, you go well north of 5% on the 10-year, because all of a sudden now you're juicing inflation, right, with lower interest rates, and that ultimately causes a lot of volatility. That causes a higher rate environment that ultimately slows growth and punishes markets. Now, I'm not saying that's our base case today, because I don't think there's really a reason for the Fed to cut interest rates, and I hope cooler heads and non-political minds ultimately prevail, and that they don't cut into an inflationary environment that's probably heading towards 4%.
Yeah, it's hard to see how we don't have some kind of inflationary environment, at least pressures, whether it's higher energy prices, even if it's a little, maybe not as high as we've seen with this war. But I also think about the global grab and national security interests of having so much now back in your home front. Like, that's got to lead to price pressures. Can we talk private credit?
Yeah.
Before the war, we were talking private credit and AI concerns. What are your concerns about private credit? What's the reality in your view?
So our concerns have been pretty consistent for much of the last 2 years, which is that there have been some managers out there, and I think they've admitted to this at this point, that have really sold a illiquid vehicle as being, somewhat liquid. And I think that's really where the danger lies today. I think it's also dangerous in many ways to lump all of private credit into one bucket. There are many different, forms of private credit. And within even, let's say, private credit backed by corporate loans, there are different types of managers. And so I think lumping all of private credit into one bucket is a very dangerous thing. But in the some of the funds and some of the bigger players that we've seen that have run into redemption troubles, I think the obvious fears around illiquidity and ultimately investors selling what they can, not because what they want to. And that's where you could potentially get a broader, I wouldn't necessarily, it's not going to be like a global financial crisis type situation, but a broader contagion event where you start seeing public credit and public markets start to go down as investors raise liquidity in an area where they can, rather than necessarily what they want to.
Yeah, it's going to be fascinating to see that. Just kind of briefly here, are there areas that you would invest in as it relates to private credit, buying the dip or sell off in a Blue Owl or some of the other companies?
Probably not. I mean, I prefer to stay on the sidelines at the moment within private credit, but again, particularly in the corporate side. I think, you could easily make a case that, whether it's infrastructure or hard asset type private credit, there's probably some opportunities there and will be for some time. I don't think you see quite the same degree of excess in those areas of the private credit space as you do on the corporate side. Essentially the leverage loan aspect of private credit, right, where you have software companies that are over levered and stuff.
5 seconds, TBD, though, really what the second half looks like. We're still got questions.
Yeah, I think TBD, but the one thing I'd say we feel very confident in is higher interest rates from here.
All right. Love it. Mike, come back soon. Mike Contopoulos, head of multi-asset macro investing at Janus Henderson Investors. When we come back, a check on the White House.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ continue to push higher. Right now we have got the S&P 500 index just about the best level of the day, looking at a gain of 33 points with the S&P now at 6850, up by about 0.5%. Dow Industrials 47,991. The Dow up by 0.1%, began the day lower. NASDAQ up 162 now. For the NASDAQ Composite Index, that is a gain of 0.7%. The VIX below 20 with a 10-year at 4.30%. The 2-year 3.78%. Gold is down $17 the ounce to $47.31 now, down 0.4%. Crude 98.75 a barrel, falling below $100 today, up 2.2%. Brent 98.90, up by about 3.8%. So bottom line here, stocks climbing to session highs after President Trump said Iran still wanted to make a deal following a deadlock in peace talks and a U.S. blockade of the Strait of Hormuz. Lululemon Athletica shares down 0.5%. This after the Texas Attorney General said his office is investigating for the presence of so-called forever chemicals in the yoga wear's brand's apparel. Again, we've got shares of Lululemon down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. An update there on the trade. Carol Massar along with Bailey Lipschultz. Bailey is in for Tim, who is out today. You know some of the headlines, right? We've got the U.S. naval blockade of Iranian ports and coastal areas. It has gone into effect. It could further inflame some tensions amid the global energy crisis. Meantime, the U.S. has said neutral ships will be subject to interception, diversion, and capture. Shipping through the Strait of Hormuz slumping back down again today, reversing some move up, a jump that we actually saw yesterday. And then we've heard from Iran, too.
Yeah, it seems like talks are advancing, the ceasefire mostly holding in. At least that's what the market is buying, with the S&P rallying after Trump spoke and then oil pulling back like we've been talking about.
Yeah, markets seem to be taking this all in stride. Meantime, Iran did say the U.S. restrictions are illegal and constitute an act of piracy and threaten the ports in the region if its own facilities are targeted. So it's like, yeah, peace, but hey, watch out. That is our world. Just around 12:40 p.m. ET, from just outside the Oval Office, President Trump spoke on the weekend peace talks in Islamabad and how it went and how his team there on the ground, which included U.S. Special Envoy to the Middle East, Steve Witkoff, and also his son-in-law, Jared Kushner, as well as his Vice President, J.D. Vance, how they did.
Well, he's done a good job, and Steve and Jared, they've all done a very good job. And I can tell you that we've been called by the other side. They'd like to make a deal very badly. We've been called this morning by the right people, the appropriate people, and they want to work a deal. They would like to work a deal.
All right, again, that was President Trump earlier outside the Oval Office, and of course talking about U.S. Special Envoy to the Middle East, Steve Witkoff, his son-in-law, Jared Kushner, and of course his Vice President, J.D. Vance. We knew we had to check in once again with our team in Washington, D.C. as we continue to hear a momentum, a flow of commentary out of the White House or out of social media. With us once again is Michelle Jamrisko. She's Bloomberg News White House and National Security Editor, again joining us from the nation's capital. Michelle, good to have you here with Bailey and myself.
Good to be here.
So let's recap. What did we get from the president? What's new? What's significant in your view? Markets just seem to be taking all of this in stride today.
Well, we're in this position again, Carol, where we're trying to decipher what each side is saying and what to believe from what each side is saying and whether that matches what's happening behind the scenes. Well, at the same time, we're watching basically for any sort of kinetic action, not that we're hoping for it, but, with the threat of a U.S. naval blockade that has come into effect hours ago and is now, also paired with the president's threats to interdict any vessels of any country transiting from Iranian ports or to Iranian ports in the Strait of Hormuz and coastal areas, as well as any attacks on Iranian small boats that might approach the U.S. naval blockade. All that taking into account, we have not seen any sort of action yet that would be a flashpoint and perhaps scare markets even further. But at the same time, we're trying to decipher what to make of the president's latest remarks on where the diplomatic talks are going after the failure in Islamabad over the weekend. Now, I will just point out in the clip that you played just now, President Trump is referring to a call that has happened this morning. To my knowledge, we have not gotten any confirmation from the Iranian side as to whether that in fact was the case. And of course, again, the question of who participated from the Iranian side. We know who went to the direct talks in Pakistan. We don't know if those are the people really kind of pulling the levers on what the regime might act on in the end.
Well, Michelle, how much, I'll call it static, is there in terms of who's actually participating in these conversations? And to your point, mixed messaging, whether these calls are actually taking place, whether the right people are involved in these conversations, and what that really means. Because if the question at the end of the day is, when does this conflict end? Presumably, it's pretty important who's in those meetings.
Yeah, well, Bailey, a very fair question and one that we've had for many weeks now in some form. But what came out of the weekend, at least, was this assurance that we knew who from the Iranian side participated, the Iranian Speaker of Parliament, as well as the foreign minister getting involved. And we know, obviously, who on the U.S. side was involved in those direct talks. So at least there was some transparency over the weekend on these, unprecedented, really, for many decades, direct talks between the two countries. But now what we see in the aftermath is kind of similar rhetoric that we've heard from both sides, really, U.S. and Iran, on where these talks are headed and what the disagreements are. There is a clear divergence of opinion and view on what broke down those talks over the weekend. We've heard, and we heard it again today from President Trump, that Iran's nuclear ambitions were the main reason that the talks broke down, that they would not concede on that point, and that's a deal breaker for the U.S. However, on the Iranian side, they have said that the distrust of U.S. negotiators, U.S. coming to the table to dictate rather than negotiate, and of course some differences of opinion on things like war reparations and actually ceasing the fighting and ceasing attacks on Iran were among other disagreements that have remained for some time. So we don't know where talks are going, and I think you're seeing investors and others act on these kind of incremental developments, but not with the sort of confidence that action will follow in line with what they've said.
Michelle, does it come down to one or two main points? Is it about the enriched uranium? Is it about, I don't know, I've kind of lost track of, and maybe this gets to the mission of what this war really is about. And so what is the main sticking point? Does it come down to one or two things here?
Well, I think in broad strokes, Carol, you can say it comes down to nuclear ambitions and control of the Strait of Hormuz. But there are many things that the two countries have openly disagreed on, including, the list of demands that the Iranians have released, some weeks ago, maybe a week and a half or two ago, that did not match what the 10 and 15-point plans that the U.S. side has put forward. So there are a lot of smaller points that I think would not be agreed, but the big idea being the nuclear ambitions. There has not been a way forward on exactly how to play that, and of course a long time distrust on either side about whether or not Iran would be pursuing purely for scientific purposes, and whether or not that would put the U.S. at ease, which it won't. So that is one big thing. But obviously caught up in all of this, and what is really feeding the global energy crisis is the control of the Strait of Hormuz, which at times the U.S. has said would be something that could be worked out for the profit of everyone. Trump has kind of alluded to a sort of toll system that both the U.S. and Iran could benefit from. But at times he has said that is unacceptable, full stop. And so now we're at a blockade of a blockade, essentially, that really has the markets in this whirlwind trying to decipher what comes next and whether things will escalate before they de-escalate again.
And Michelle, we only have about 30 seconds here. One of the touch points we've talked about on the markets desk is kind of this notion of a Trump put. At some point, he will walk back what he's pushing for, with midterms on the horizon and with energy still far higher and more expensive than many people would have expected. Is there a time crunch or a limit where the White House is going to have to consider potential weakness going into the midterms, just given rates are not lower and the cost of living has only gone up in the last few weeks?
Michelle, we've only got about 25 seconds. Yeah.
It's a great question, Bailey, and I think a lot of the political actors within the administration are looking toward the midterm deadline as a hard stop, but really would like things resolved much sooner than that to kind of alleviate Americans' concerns. But we've seen gas prices get worse, and the Iranians try to exploit that as well, warning that they would get much worse before the critical midterms if the Strait of Hormuz blockade continues.
Yeah, right? It just makes you ask so many questions if you think about the midterms coming up. Michelle, thank you so much, as always. Michelle Jamrisko, Bloomberg News White House and National Security Editor there in the nation's capital. When we come back, a check on trading and some stocks on the move. This is Bloomberg.